Good afternoon, everyone, and thank you very much for being here, and thank you for the organizers, the Finance Club, and thank you for my colleagues for setting up this presentation as well. So I don't guarantee that our presentation will be fun, but I think it will be very useful, and it will give you some insight about where I come from, which is the Capital Markets Authority. And it will give you some insight about financial statements and our job or our role, how to limit any frauds in these financial statements. So just brief introduction about myself. My name is Yusuf Hussein. I have a master's degree in accounting, and since 2012, and since then I've been working in the Capital Markets Authority as a financial analyst. And before I start, just to get an idea about you guys, how many of you are business major? Okay, good. And how many of you have taken any accounting class? Yeah, in uni or outside? Any background in accounting? Okay, so good news. It's not going to be about accounting. When we say the word fraud, what do we mean by fraud? Like when someone frauds, yeah, go ahead, any one of you. Fake, it's a very good term. Someone who gives us fake reality. Someone who tells us that this thing is something, but reality is something else. Someone who gives us alternative reality. So someone who says that I'm a doctor, but he is not a doctor. Someone who tries to sell us something, but this thing turns out to be fake or ingenuine. So anything that is, let's say, beyond reality or beyond, let's say, accurate, it's fraud, and that person becomes fraudster. So there are a lot of types of frauds in this world, but today we're going to talk about financial frauds, and specifically frauds that are committed in the financial statements. And we're going to talk later about what do we mean by financial statements. So in general, our topic today, we're going to talk about how companies commit these financial frauds in the financial statements. And to go through our main points in this presentation, first we're going to talk about what do we mean by financial statements frauds, what's the definition of that. Okay, you have the definition? Yeah, okay. Yeah, manipulate people into like investing in that company, and turns out that company has nothing to offer, or promising some high earnings or high return for the investors, and based on fake information, and it turns out that company is nothing but a scam. So we're going to talk about that in details later. We're going to talk about the motivations. Why do companies or people commit these kinds of frauds? We're going to talk about then the methods that are used to commit these frauds. And then what's our job as a regulator to limit these kinds of frauds. No one can, like, let's say just our job to limit these kinds of frauds. So to answer the question or the point, the definition of financial statements frauds, we have to ask ourselves three questions. What do we mean by financial statements? What is the purpose of financial statements? Why do companies produce financial statements? And then at the end, what is financial statements frauds? How do companies commit or make these frauds? So the first question is, what do we mean by financial statements? From the name, it's not a financial statement, it's financial statements. Multiple statements, not one statement. And just to give you an idea, I brought with me like an example. This is how big or how it looks like a financial statement. It's about 70 to 80 pages. It has all kinds of information about the company and its performance. And let me show you just how, what's the main information that are available in these financial statements. So here we have the main content of the financial statements. You can see the first thing we have is the auditor's report, independent auditor report. Any public company, or even many companies in Kuwait, even that are not public or not listed in Kuwait Boursa, they have, after producing their financial reports, they have to bring an external auditor, someone who's outside the company who will review all the information and produce a report that says if the company is the financial or the information in the financial report are accurate or not. Yes, go ahead. Currently in Kuwait, all companies have to provide auditor report to submit to the Ministry of وزارة التجارة والصناعة, Ministry of Commerce. So all companies are audit offices. Like you go to an audit business, you ask them to come to your business to audit your financial information, and they will come and check. And they are required to produce a report that says, after reviewing all information that I have reviewed are good and accurate. Or they can say, no, there is an issue. You have anyone who reads these reports have to take note that there might be a problem in the information that you are reading. Then we have the statement of profit or loss, and then when we have statement of financial position. These are the two main statements, let's say. And I'll go over these two statements very quick right now. So before I go over these statements, this is how the auditor report looks like. So here is the main conclusion. It says that we have audited, and then that all the information, all the performance and its consolidated cash flows for the year then ended in accordance with the international financial reports, the standards report. So it says that all the information that were presented here are in accordance with the accounting standards. Then we have the main statements. I'll go over the statement of financial position first, then the income statement. So here we have what's called the statement of financial position, or some people call it balance sheet. Here's the statement that shows what's your net worth. Like we always hear that this businessman, let's say Bill Gates, Elon Musk, his net worth is 140 billion, for example. What do we mean by net worth? Net worth is basically what do you have? What you have? Let's say some houses, cars, cash accounts. You take all these, let's say it's 100,000 KD, and you deduct liabilities, what the banks owe you, want from you. So you take all you have and what you have to pay to the, minus what you have to pay to the banks, and you are left out with your net worth, or what's called now here is the equity, or shareholders' equity. So shareholders' equity is basically just all the assets, the items that you have. We have cash, we have investments, we have properties. We have here 618 million KD, minus what the banks require you to pay, 292 KD. You are left out with 325 million KD. So this statement just shows you how much you have and how much is left for you. After, if you like, let's say, sell all your assets, all your belongings, and pay the bank, you are left out with 300-something million KD. Now, what's the difference between this statement and the income statement? We have here the income statement. This statement shows how much you make and how much how much income and how much are your expenses. So you have, let's say, real estate properties. You collect rent. The rent shows here in this statement as part of the income. And how much, let's say, maintenance payment, maintenance expense, how much salaries you are paying. So this income statement shows how much you make and how much you are paying, and you're left out with what's called the net income here, which is a profit of the year. This company made 13 million KD. And this 13 million KD will go to your balance sheet as like part of your, some of it as an asset in cash, and of course will be part of the equity. So now we understand what we mean by financial statements. It's just a very long report about the performance of the company. All information about the company and its performance you can find in these reports. And of course, there's much more valuable information about the company in these reports. For example, if I want to know what kind of properties they have, here it says that they have investment property under development. Here we have investment properties. It says that I have to go to note number 16 to know more about these properties. And just to go to note number 16. Here it gives you more information about these properties. And for example, this company tells you that one of its properties is Al-Kut complex, and I guess it also owns 360 Mall. So all these information are available in these reports. Let's go back to the PowerPoint. So when we ask what do we mean by financial statements, they are just written reports that describe a company's activities and its financial performance. Why do we need financial statements? So just to simplify things, when you go to a doctor, before you enter the room of the doctor, he tries to collect some information from you. For example, how much you weigh, what's your temperature, do you have any allergies? You have to give accurate information to the doctor in order to diagnose you correctly. If you give false information, he will not be able to diagnose you. Same thing with the financial statements. The company is required to give you accurate information in order for you to take the right and the correct investment decision. Should I sell, should I buy and invest in this company? If I own it, should I sell my share in it? Should I wait? So in order to make that decision, you need financial statements. Let's say you want to invest in Apple or Microsoft. You can open the financial statements of that company and read its performance and all kind of assets they have and make that decision. If Microsoft or Apple provide false information, maybe you will make the, let's say, the incorrect decision about that company. So what is the purpose of financial statements? Is to reach the correct investment decision or analysis about the company. So let's take an example of how to analyze a company. Just I will not go into details, but just an example. For example, if we go to the balance sheet, let's say we see one of the items is cash and bank balances. We see that there's an increase of cash from 28 million to 32 million. Is that a good sign or bad sign? It's a very good sign. Having a liquid company with liquid cash, liquid assets, it's a very good sign. We hear a lot of talks recently here, for example, in Kuwait, that we have no liquidity to pay, for example, salaries. Even though the country is very wealthy, but all their wealth is not liquid, which is in cash. they have to sell assets in order to have liquid cash then to pay their salaries. So having very liquid company is a very good sign. And another sign maybe we can see is that there is a jump in the total assets from 570 million to 680 million without taking any loans. Like we have see that there's a decline in loans, but an increase in assets. So that means that the company is growing without the need to take any loans from the banks. So that's just some simple examples of how to analyze the numbers in the financial statements. Okay, so we understood what we mean by financial statements. We understood the purpose of financial statements. And then what do we mean by financial statement frauds? It's just a fraud that committed within financial statements by providing false information inside these financial statements. So in the balance sheet or the income statement of the company exaggerates in its assets, its net income. That's a fraud committed in the financial statements. Next, motivations. Let's say if I don't, my company has assets of 1,000 KD and I just added 0 or 3 zeros. Let's say I made it 1 million. Why would I do that? What can I get in return for just playing with numbers? Okay. That's one reason, good reason, yes. Investments, get investments. You have. Okay, these are very good answers. Yes, because banks don't give loans to companies that are failing. That's a good answer. And that's exactly what I'm going to discuss now. So I summarized the motivations into 4 main points. Getting financed by banks or investors, complying with regulatory requirements, personal gains, and tax evasions. So I'll just take an example for each type. As you guys answered that providing false, exaggerated numbers about the performance and the assets will attract investors, will also allow banks to give you loans to even go even bigger. The second reason is complying with regulatory requirements. If you have any business, you are required to submit financial statements to the Ministry of Commerce. So if my business is failing, or if I don't have an accounting department, I'm required to just, in order for my license to be active, to submit any information, even if it's not accurate. So just for complying with the ministry or even for the CMA, Capital Markets Authority, I will submit any financial statements even with false information. Then personal gains. For example, if I'm, let's say, I'm the board of directors of one company and I own some shares. Let's say I own 20% of my company, and I want to sell it and get some and increase the stock price of my company. I'll provide inaccurate information in the financial statements, and people will be more willing to buy that stock from the Borsa, and the stock price will go up, and I will sell my shares to gain some money from that. And lastly, which is tax evasion. Maybe it's not doesn't apply in Kuwait, but many companies have incentive to lower their earnings in order to avoid paying taxes to the government. So these are the main motivations for committing financial statements frauds. The methods. what's the methods that many companies use to commit these frauds? So we have 4 main methods. We have manipulation of asset valuations. We have false transactions, manipulation of timing of the transaction, and false disclosures. For the manipulation of asset valuations, many assets are subject to periodic valuation. For example, if you have a real estate, you buy it for 1 million KD. Next year, maybe the price or the value of that real estate will go up or go down. You have to record any changes in that, in the valuation of that asset. So companies use that, let's say, window to play with the valuations. If the real estate property is worth 1,200,000 KD, they will try to push it up a little bit to show that my assets are growing or I'm making some gains in that investment. Same thing with the intangible assets and investments in shares and stocks. So these kinds of assets are subject to yearly valuations, and companies have incentive to play with these valuations to show that their assets are growing. Then we have false transactions, and some companies may record that they have cash, and it's actually not in the position of the company, it's the cash of someone else, but they record that cash in their statement of financial position, which is incorrect. You are only allowed to record assets that belong to the entity itself. And sometimes they incorrectly record some revenue. Let's say someone paid you rent for 2 years in advance. You are not allowed to record all that revenue in your income once it's paid. No, once, like after 12 months, after the end of the service that you provide, then you're going to be allowed to record the revenue. Then we have the manipulation of timing of transactions. Sometimes you make accurate transaction, actual transaction, but you don't want to record the earnings this year because you feel that next year I might be losing some money, so I will shift my revenue from this year to next year. So I play with the timing, even though the amount is correct, but the timing that I'm showing that revenue is incorrect. And that's one of the methods that companies use to commit frauds in the financial statements. And finally, we have false disclosures. Maybe the amount is correct, the timing is correct, but the details about the transactions is incorrect. For example, I paid salaries of 100,000 KD to the CEO. I don't want to show that information to the people. I don't want to show people that I'm paying my CEO like a very big salary. So I'm just saying, I will write that this amount is for maintenance, let's say. This amount is to pay some, or to buy some inventory. So even if the amount is correct and the timing is correct, even the details have to be correct. You have to disclose the accurate details of that transaction. Okay, so we discussed the meaning of the financial statements frauds, the methods used to commit these frauds, and the motivations. Now, finally, the last point, we're going to talk about what's our job in the Capital Markets Authority to make sure that these kinds of frauds are not committed, and if so, we will issue violations against these people who are committing these frauds. So first thing, we have corporate governance regulations. What do we mean by corporate governance? It's like, even if the Capital Markets Authority is not there, the company should be able to track any mistakes and inaccuracy in their financial statements by itself without relying on the Capital Markets Authority. It's like the fire department will make regulations for the buildings to be designed a certain way, and you have to have fire extinguishers, you have to water dispensers in case that a fire breaks out, the building or the owners of the building can take the fire off by themselves. No need for the for the fire department to come. But the fire department will always be there in case even you cannot take care of that fire. Same thing with CMA. We issued regulations for companies to implement inside the company so that the financial statements produced by them are accurate. And how do they do that? So let's say any company has a board of directors, 5 people, 7 people. Board of directors are usually the owners of the company. Between themselves, they have to form a committee called the audit committee. These are people should be who are specialized in accounting and like let's say finance in general, to discuss all details about the financials of the company. And they are also required to hold meetings with the external auditor who is auditing the company. And in addition to that, after implementing corporate governance, we as CMA are reviewing all the financials of the investment companies. There are some companies called investment companies that are specialized in just dealing in securities. And there are also companies who are listed in Kuwait Borsa. Their stocks are traded in Kuwait Borsa by the public. So we as CMA make sure that any mistakes presented in their financial statements are met with harsh and strict penalties. And finally, part of our job is to provide awareness to the public about how to understand these financial statements, how to properly read and analyze them, and how to make the correct financial decision. Okay, these information may be, as I discussed earlier, the inclusion of strict sanctions and penalties within CMA regulations, and finally the awareness regarding the commitment of financial statements frauds. And I guess that's the end of our presentation. And thank you. And let's say if anyone has any question about the topic, about capital markets, about financial statements. Yes?
When do you suggest that if I were to invest, what do you suggest is like the best time to invest?
Anytime you have extra money that you don't need, whether you are 18, 20, 25, 30 years old, when you have money sitting in the bank that you are not utilizing, it's better. You can either put it as a deposit in the bank or in a saving account to get 1%, 2% return, or you can invest in stocks that give you maybe a higher percentage of return. But any time that you feel that you have extra cash, it's better to make your cash work for you. And so it depends on how much you have cash on the side you can invest in. Yes?
How do I have that kind of mindset? I'm so bad with my money. I don't know how to guarantee that my investments will be successful in the future.
Yes. No one can guarantee that your investment will be successful. There is always risk. The higher the risk, the higher the return. The lower the risk, the lower the return. For example, if someone tells you that I can guarantee you 50% return on your investment, if you put 1,000 KD, I'll give you 1,500 back in 1 month, 2 months. It sounds like a good deal, but you should understand that the higher the risk, the higher the return, the higher the risk. There's also 50% chance that you will not get your money back. The lower the risk, the lower the return. So many people, like investment, they say you have to diversify. You don't put all your money in one basket. you have to put it in different baskets. And in case one investment fails, you have other investments that can, let's say, يعوض investment مالك. So it's very important for investments to diversify, to make sure that in case any investment fails, you have something else. And always be careful of investments that offer you high returns, because with high returns come high risk. Same thing like if you want to deposit your money in some risky countries, they always offer high returns. Some countries, if you deposit your money in their banks, they give you back 20% on your deposits. But many of these companies have failed to pay back, or even their currency value went down very hard. So if you invest in safe countries, they will offer you low return, but at least you make sure you are, let's say, comfortable that your money is there and can be taken out. Yes. Yes, that's what I was saying, that you have to, it's called diversification. You have to put your money in, don't put all your money in one basket. You have to diversify, just to make sure that, let's say you have, let's say 5 baskets. One basket gives you 1% return. Take the second basket is 5%, then 10, 20. The average is 12%. Maybe that's a good strategy. Yeah, always diversify. If you put like many people put their money in one company and that failed, some people, let's say, same thing maybe with cryptocurrencies. It's a very, at the beginning it had very high return. People were very exciting about it. Some people made good money out of it, but also many people lost. So the higher the return, as I said, the higher the risk. Any other questions? I think that's it from the client. Okay. Thank you so much. Thank you for coming, and have a good day.